going to talk to us today on the impact of COVID-19 on the red meat outlook for New Zealand, and he's going to give us a presentation and then we'll ask for questions. So Blake, welcome. I'll turn it over to you.
Excellent, thanks Jackie, and thanks for you guys for hosting me. I'm just going to try and find my presentation, which I hope to be able to bring up. Now, can everyone see that okay?
Yep, that's great.
Excellent. Yeah, so as Jackie mentioned, I thought I'd just quickly, it's probably pretty hard to go past COVID when we're talking around themes impacting everything, but the red meat sector. I've labelled the presentation short-term risks and long-term opportunities in an uncertain world, because I think that kind of sums up where I'd see things playing out of the next months with some reasonably significant challenges. But I think coming out the other side or beyond that, there's some opportunities that I think it's important we keep in mind as well. Just a little bit of background about Rabobank. So a global bank based out of the Netherlands. Outside the Netherlands, we only bank the food supply chain. So we're a very specialist bank, and for some reason my presentation's disappeared.
Sorry.
Yep. Yeah, so as I said, so we bank the food supply chain. Part of the ethos at Rabobank is the highly knowledge driven, so like to provide insights to our clients and throughout the organization. So that we've got a global research team, so they've got approximately 80 to 90 analysts across the globe in all the key markets we operate in, broken into different commodity and sector teams. So I'm part of the global animal protein team. So obviously in New Zealand, that's very much beef and sheep meat, but my colleagues in different parts of the world, that could be poultry, pork, seafood. And the idea is that we can meet on a regular basis, have calls to catch up, to hear what's actually happening in the ground in those different markets, which then feeds into the various publications that we produce. There's three analysts based here in New Zealand. So myself, I cover, as I mentioned, animal proteins and anything to do with sustainability. We've also got Emma Higgins, who is our dairy analyst, and Hayden Higgins, who's actually no relation, but he covers horticulture and viticulture. So sort of the insights we get from those team members sort of feeds into presentations like I'm going to give here. I think it's important just to probably give a quick recap if we think back to the start of the year, because things have evolved and changed quickly and significantly. At the start of the year, Rabobank always produces our agribusiness outlook. So what are the key themes or issues or topics we see impacting the sector throughout the year? And we were sort of, when we're talking about wild cards, we had the New Zealand election, which we thought, given the prominence farming or agriculture had in the last election, was something to keep an eye on. Trade is always an important, significant one for New Zealand, but particularly around that EU-New Zealand trade deal. At the time, China and the US had just signed an agreement that would see China purchasing a significant volume of agricultural products from the US, and one of those being beef. So that was something we wanted to keep an eye on. And just as we were about to release the report, there was this outbreak of this thing called COVID in Wuhan. So we said, look, that's something we also might need to keep an eye on. That was sort of late January. By February, it was all about COVID, but very much in that China setting. So we were probably all aware of the significant supply chain disruptions that COVID caused as ports were at significantly reduced capacity. People and transport movements in place meant food commodities weren't getting from ports out to the end users. So we saw this big stockpile or build up of product, which at one point effectively China said, look, we don't want any more product, or we can work through this. And this had a significant impact, on February initially on the volume of New Zealand red meats to China. And again, during February, it was very much the discussion was, how do we manage through this situation while our biggest buyer for beef and sheep meat is out of the market? We need to manage the situation until it resolves itself and things get back to normal. Of course, since then, things kind of went the other way. And in March, it moved from just being a China issue to really a global issue, a global pandemic, and that changed the game altogether. And really is where some of these significant impacts or risks that I'm going to discuss sort of really flow from. One of the important things to probably highlight is the timing in terms of, while China was getting on top of it, effectively getting better, was when the rest of the world was getting sick. But thankfully, as you'll see soon, the timing probably worked fortuitously for us in terms of at no point really was China significantly affected at the same time as their other key markets like the US and Europe. So what we're seeing is a pretty familiar pattern around the impact COVID has. So we sort of have an outbreak, and then we go into or announce we're going into lockdown. So we see pantry stocking. So we'll see retail sales start to increase. At the same time, food service is either shut down or severely restricted. So we see sales through that channel decline significantly, people eating more at home. We also have those logistical and supply chain issues and disruption to the movement of products. And we sort of move that through that phase, and we, as we start to head towards recovery, we start to see food service start to open, but what we're seeing is that recovery is quite a slow process. It's not a quick rebound. Either consumers have confidence issues that they don't want to be out and about too many people, or when restaurants are allowed to open, it's under severe restrictions. We talk around the 6-foot economy, so adjusting to running an economy where everyone has to be 6 feet apart. And then, of course, we start to flow on to some of the economic and income issues as unemployment starts to really bite. What we have seen, though, is that while I've sort of described it as quite a linear process, that's not really the way it's starting to play out in terms of where some regions, some countries have moved through this synchrony recovery stage, and then we have a re-outbreak or things get dramatically worse again, and you have to sort of regress back into some form of lockdown or restriction, as they've had in Melbourne recently. This is really sort of just demonstrating what I've said and how that's flowed through to sales through the various channels, through food service versus food retail in the key markets. And we can see, if you look at China, the impact on food service sales through January, February, March, and to a lesser degree April, was severe and significant, partially picked up by the food retail sector, and a similar pattern we saw in the US. Initially, that pantry stocking phase was enough to offset the decline in the food service sales, but as consumers move past that phase, that the net result has been a decrease in the money spent on food effectively. Again, what we've seen in China, even coming out of lockdown, when some of those restrictions ease, it's not a sharp bounce back. It's a gradual, slow recovery. The latest data shows for June, China's still down 15% through that food service channel. Now, in any other time, pre-COVID, outside this crisis, if I was giving a briefing, a negative 15% in food service in China would be a major and significant risk and issue we needed to look at. But just given the volatility and the amount of other things happening at the moment, that's just another factor to highlight, really. The net effect of all of that has generally been a downward pressure on prices for ag commodities across the board, in US dollar terms at least. This is just showing an index of some of the various commodities that New Zealand produces and exports, and we can see, since mid-January that there's been a general downward trajectory or trend in pricing. Probably worst around April, started to see some recovery in May. The noticeable exception there is the dotted line, which is US imported cow meat or beef, which is that manufactured beef product, and that's very much a story related to the processing disruptions in the US, where at some points during May the processing capacity in the US was down to around 50%, which created a significant shortage of beef in the US, which saw them turn to amongst other things, the import market to fill that gap, which really gave that imported beef price a shot in the arm. We have since seen then processing in the US recover to near normal levels, and that imported beef price has come back off that high we saw in May, but recently it has sort of settled at a level pretty similar actually to where we were this time last year. In terms of how our exports sort of fared through that situation, I think things held up pretty well. I think our exporters did a good job, and it highlighted a couple of things. One is it actually showed we do have reasonable market diversity. There is a concern, quite rightly, that we have a concentration risk in China around our sheep meat and beef exports. But what we did see in February, as I discussed earlier, China, our largest market for both, was effectively or out of the market or significantly reduced at least. And we were able to redirect that product into some of our other key markets. For beef, that was very much a United States story. So United States still very much in demand for beef at this time, remembering this was pre-COVID and some of those other processing disruptions I was talking about. Probably not that surprising, given traditionally the US has been our largest market for beef, and it was really only the last 18 months that China's overtaken them. But since then, and this is where I'll talk about some luck has also helped us. In May, we saw things sort of revert back to normal as the rest of the world got sick. Some of our key markets, again, like the United States and Europe, sort of took a step back. And China stepped back in. Just to show how volatile things are, I don't have it up there, but the latest June exports would show in terms of beef, it's actually reverted back to the United States again, high demand, some of those reasons I talked about before. I think they took close to or over 50% of our beef in June, where China was down under 30%. So we're seeing huge shifts in volatility, and our exporters are having to be reasonably agile around where our products are going and changing at pretty short notice. Similar story for lamb. Last season, China took 38% of our lamb by value. February stepped out. We saw the United Kingdom, the EU, the Middle East sort of step up, and again in May, as the rest of those markets were stepping out, China very much stepped in. So sort of all of that has helped us to sort of mitigate some of the impacts or provide some sort of buffer. Of course, it's all well and good being able to move or sell a product. Anyone can sell a product at the right price, but I think the other positive fact has been that generally our export prices have held up relatively well. So I've just shown this is the average value per tonne for our beef exports and lamb exports for each month of the season. The orange lines being this season, and we can see while prices for both beef and lamb exports came off that record high we had in December, that was very much the high tide mark, and we're always going to sort of naturally come back from there. Prices, with the exception of lamb for May and June, for this entire year, right through the COVID crisis, have still tracked at a higher level in New Zealand dollar terms than what we got last season. So again, that shows that the market's been reasonably robust, and while there's been significant volatility behind the scenes in terms of sales channels, in terms of different markets wanting different products at different times, overall value has held up. We are starting to see that impact, though, of particularly food service for lamb, those high value cuts, and I've got a slide to show you soon, that is starting to sort of negatively impact the value we are getting, and lamb is now starting to track behind where we were going last year. In terms of what that all means for the schedule price or what farmers are getting, bit hard to see there, but I've got a green dot for each, which is sort of the latest schedule price that I get from Agri HQ. So we can see with like North Island bull, for example, tracking very much in line actually with what the pricing was this time last year, which is that that line I've got in bold there. South Island will be slightly different. We are seeing quite a big pricing differential between beef in the North and South Island because of different procurement drivers. So that is probably tracking slightly behind. Lamb is a slightly different story. Right up to sort of March, lamb was holding above last year. But given some of the domestic processing restrictions we had through lockdown, and then flowing into that weaker market that I've just highlighted, we've really seen the lamb schedule price flatten off at a time of the year when we would otherwise expecting it to lift. In the last couple of seasons, they've been quite significant lifts, very much not getting that this season. And looking out for the rest of the season, I'd expect that trend of a flat price to continue. In terms of looking forward, we're still sort of far from through the COVID crisis. If you look at global infection rates, they're still rising quite significantly. There was a period of around 6 weeks where it looked like things had stabilised and we might be on top of things, particularly in our key markets and in the United States and parts of Asia and parts of Europe. But we're again seeing infections there start to take off, and again that sort of goes back to my point around that linear line I had around impact of COVID-19 on various factors, not being linear in terms of having to cycle back as we have reinfections and new outbreaks. So by no means are we through this COVID crisis yet. And this is showing up in again that restaurant data. We're seeing even coming out of lockdown, countries like China, the US, Australia are taking a while to rebound to normal levels. If you look at those, that restaurant trade, OpenTable is an app, a booking app. So I've just been tracking that to see again how food service has been tracking in various markets, and we can see that dramatic drop off of 100% through lockdown in some of those key markets. Started to you sort of bounce out of it, some of them. If you look at Germany, for example, but again, as we go back into lockdown, somewhere like Australia, it has seen those bookings fall right off. Probably important to highlight, food service is quite a broad term. Within food service, you'll have anything from your fine dining restaurants, which serves, our French rack or prime steak, and they're the ones that have been significantly impacted, as shown on that graph on the right there. But it also does incorporate your quick service restaurants like McDonald's, which haven't been impacted to the same extent. By and large, most of those quick service restaurants have been able to continue to operate through COVID to some degree. Which has been, really beneficial. Again, we're talking like beef, which is where a lot of our beef product will flow into. So that's why we're seeing sort of different cuts or different products being impacted differently. So if you look at something like lamb leg in the UK, yes, it's come off. But predominantly sold through that retail channel, which has held up relatively well. So that means price of leg is actually tracking similar to where it was last year, and well above the 5-year average. But then something like the French rack that sold almost, or not quite exclusively, but heavily through that fine dining food service trade, it's just dropped off the floor because there's really been no demand, which obviously impacts the overall value of the carcass. And again, shown that US imported beef price, which is that manufactured beef product that goes into mince. So it jump up there through May due to those processing disruptions. It has come off there since there, but still tracking at similar levels to where we were last year. Initially, we saw sort of broad-scale industry-wide supply chain disruptions and challenges that I mentioned earlier, particularly in China. By and large, we feel those have been sort of worked through, and there's not the same degree or level at a whole supply chain level, but they are becoming more what we'll call company or processing plant specific. So the example we have there is with the reinfection in Beijing. Chinese authorities made a link between COVID-19 being brought in on imported food, salmon in that case, and have ramped up inspections at certain ports, and have also made it clear to exporters that, you know, we don't want products that's coming from plants that have workers that have been infected with COVID-19. So we have seen, you know, in excess of 20 plants in different countries like Brazil, Argentina, parts of Europe, sort of have voluntarily withdrawn from sending products from those plants to China. So again, we've sort of gone from a whole supply chain disruption to more of a plant-specific disruption. And similar case recently in the last couple of weeks in Australia, with in Victoria, a number of sheep meat processing plants having an outbreak within their staff. It has seen them close down. Everything I've sort of described to date has been very much around the impact of COVID-19 and the measures put in place to control or contain it. Very quickly, it's going to go from a COVID containment crisis to an economic issue, and probably in some regions we're already there. Our economy team is telling us they see this being the biggest recession since the Great Depression. So they're putting global GDP to decline by 4.1%, which is, you know, significantly greater than the global financial crisis in 2007, 2008. Almost all the key markets we supply into will be hit by a reasonably major recession. Probably the other factor that makes us different from the global financial crisis is the global financial crisis by and large sort of hit those westernized developed countries, where this is going to hit everyone. And I've highlighted China there. We do still at this stage see China growing by 1.2%, but we're not used to trading with China with a growth rate anything below 6%. So even that 1.2% is a significant drop off, a significant decline. And of course that starts to flow through to unemployment numbers. It impacts wage growth or lack of, and ultimately spending or purchasing power for consumers in the markets that we're supplying. In some ways, if you look at our forecast for next year, looks like some reasonably strong bounce back. But even with those numbers, for most economies, that 2021 recovery won't be sufficient to offset the fall we've seen in 2020. So in other words, the end of next year, those economies in red will still be smaller than when they started this year. Noticeable exception again being through China, India, and some of those other Asian markets we supply. What does that mean? Well, that means, you know, consumers in those markets will have less purchasing power, and we know from recessions or economic slowdowns that does impact negatively those higher cost proteins that we produce. Both beef and lamb are what you consider high cost proteins compared to your poultry and pork. And we can see on the left there, you know, US beef consumption during the last GFC, which is that dotted orange line, and as GDP came off in America, you know, beef was the protein that was hit hardest, and it did take a long time to recover. And we also know unemployment affects sales through those food service channels, and it took a good sort of 18 months for those sales through that channel to recover in the US during the last financial crisis. Well, you know, I said lamb and beef are both high value or high cost proteins. There's obviously cuts or portions within the carcass that aren't what you'd consider high cost. Again, manufactured beef, some cuts of lamb are lower cost, which we think would hold up reasonably well. Again, it's probably just those higher value cuts that the price coming off them, and the overall impact that has on carcass value for the whole product. We are lucky that there's a number of key factors we have in the positive column for our red meat exporters at the moment. These were factors that were by and large at play at the start of the year that otherwise I think would have supported really strong prices for our product for the second half of this year. That they've sort of flipped to being, offsets to go some way to negate the negative general impact on prices. The biggest one by far is African swine fever, and we think that will remain a major pricing support in 2020. So the outbreak of African swine fever in China over the last couple of years has had a significant impact on their pork production. Last year, the pork production was down around 30%. Or close to 15 million tonnes of pork that wasn't produced last year, that was the year before. To give some context, New Zealand produces around 1 million tonnes of red meat. Another comparison, the drop-off in China's pork production last year was the total pork production of Europe for that year. So that's a huge gap in protein that China isn't producing, and they do need the import market to fill that gap. And we saw in 2019, us and other key beef producing exporters really got a shot in the arm, and our exports to China effectively doubled year on year. In terms of pork production this year, we think it will be down another sort of 15 to 20% on those low numbers last year, as they go through that sort of rebuilding phase, so have less stock available to kill. So that's sort of just further compounding the protein gap they have there, and really underpinning sort of global protein supply and demand dynamics. So that's sort of a really big factor that's still at play, still really important. The other one is, if we look at our key competitor, both in the lamb and the red meat market side of things, Australia, we are expecting reduced exports of both those products this year. As we're probably all aware, Australian farmers have faced reasonably challenging climatic conditions for a number of seasons now, predominantly drought, but also floods in northern Queensland last year, and to a lesser extent bushfires in Australia earlier this year. And what that's done is that's driven their flock and herd numbers down to record low levels. Thankfully for them and us, they've had significant rainfall in key producing regions this year, which has seen them enter a rebuilding phase, which means they will be looking to build up stock numbers rather than killing stock numbers. Net result being a drop in the amount of product they have available to export. So if we look at beef, for example, we think their beef exports will be down 17% in 2020 this year. So if you look at common markets like the United States, New Zealand and Australia provide somewhere around 70% of that manufactured beef export market into the United States. So with Australia sort of not being in that market or being well down, that goes a long way to offsetting any potential drop off in demand from the United States. We saw through the COVID crisis a significant weakening of the New Zealand dollar, which did go a long way to offsetting the fall in many of our commodities in US dollar terms. Since then, we've seen also a strong strengthening of the New Zealand dollar. Our economists are predicting the dollar to weaken again. Essentially, they don't think investors have appropriately factored in the risk that's still out there from COVID-19 and the economic slowdown. And as it becomes more apparent of that risk, investors will look to put their money into safer currencies like the US dollar and the yen. And saying that, the economists have been saying that for a while, and the level they're telling us we'll get to in 6 months seems to be lifting. So if I gave this presentation 3 months ago, I would have been saying we'll be down to 54 cents in 6 months. Now that's down to 60 cents. So still, in terms of where we've been operating in the last 5 years, it's still a relatively low dollar, but not to the extent that we originally thought it might get down to. There are still, this is still very much an evolving situation, and there are a number of significant key, material and real downside risks out there, and some of them we're actually starting to see play out over the last month or so, or a couple of months. Again, if I was given this presentation a couple of months ago, I'd be saying, a reinfection in China is something that's a real big risk. Well, we have seen that to some degree with that Beijing outbreak. Another risk we're starting to see in China, or we're keeping a very close eye on, is the risk around stockpiling of product. Our analysts there tell us, despite that hole that African swine fever has created, they think China is still importing more than they're consuming, and have been for the last 6 months. So there is the risk that they are building up stocks to, if they need to turn the tap off to that import market, can and will do reasonably quickly. So that's something to keep an eye on for this year. Already discussed that risk around the New Zealand dollar, but again, if it doesn't weaken like we're anticipating because of various fiscal or monetary policies in the different regions across the globe, that helps remove some of that shelter we have from falling prices in US dollar terms. And the fourth one, and again, this was a factor that was very much at play before COVID, but I think will be even more of a factor at play post-COVID, is some of those geopolitical tensions, particularly between China and the US, and if or how New Zealand, as a producer that's heavily exposed to the export market, how some of those geopolitical tensions could play out and impact us. Sort of, the here and now that I'll see us facing over the next 6 to 12 months. I do actually think, as we look through the fog or the haze of this, there will be some good opportunities for New Zealand agriculture actually as a whole, and specifically red meat. Whenever there's major change in whatever you're doing, it creates opportunities. I think the timing of this actually works well with many of the domestic nations we're going through here in New Zealand. So we have and are been doing a lot of navel gazing in New Zealand around who are we as food producers, and how do we want to position ourselves going forward. So I think, as a result of COVID, we will see some structural changes around how and where food is and what food is consumed. So I think we're now able to sort of incorporate that into our thinking around how we're going to position ourselves going forward. We in lots of ways, we don't produce huge volumes of red meat compared to countries like Brazil. So we are sort of in lots of ways nimble enough to capitalise on some of those structural changes, and look to reposition ourselves. So the rise of online sales, tapping into those sales channels, seeing people eating at home more and not so much at restaurants. I think we'll see much more focus on sales channel diversity. So often we think of market diversity being, which region or country are we putting product into. I think increasingly it will be, is this product going into food service, into food retail? How easily is it to pivot from one to the other? Does that have implications for our packaging? Does that have impacts for our relationships and markets and all that kind of stuff? So I do think we can capitalise on that. I mean, food safety and health concerns are always probably the top factors for consumers, but I think given COVID-19 has been a health-related crisis that has links to food safety, that's going to become increasingly drive purchasing decisions even further. New Zealand was probably already well positioned from a reputation point of view in both respects, particularly around sort of our extensive pasture-based systems. But I think, touch wood, the way we've managed COVID-19, and if we can continue to largely keep it outside our borders, I think that just goes to further reinforce that perception in the minds of consumers. Food security will become a concern or a pressing issue for both consumers and policymakers around the world. So for the first time in at least a generation, there will be consumers that have gone to buy food at this local supermarket and not being able to. So there will get pressure on policymakers to ensure that local production is shored up. The risk there being that some kind of barriers are put up, which we need to be very cautious about. But I think what New Zealand producers have demonstrated through this whole crisis is, despite severe adverse situation, we've been able to continue to produce, process, and export our products. So we've demonstrated a high degree of reliability. So we've demonstrated we are a reliable source of food. Now, again, that hasn't been the case for everyone. You look at United States and South America, the impact to processing facilities there. I mean, even if you are producing it locally, it doesn't necessarily mean that's a way of securing your supply. So I think that's how we need to position ourselves as we go into trade negotiations, and we're talking about market access. It's not around having local supply for food security. It's about an access to reliable supply chain, which I think we've done a pretty good job of demonstrating. And the last one there, we're probably already starting to see play out, as we all know, the agriculture, that the sectors come under pressure from various sectors, whether that's the public, media, policymakers over recent years. And I think given the reliance New Zealand, at least in the next year or two, will have on the sector, it's a good opportunity to sort of reposition how the sector is viewed in the eyes of the public and the government, and also tapping into future talent that may have been eyeing up opportunities in different sectors, and those sectors may not have the opportunities that they were looking for the next year or two, and ag may be able to provide some of those. So look, in summary, I think there's still significant uncertainty out there, both at the ongoing COVID disruptions, and we've still by and large got some of those economic crisis impacts ahead of us. Overall, that does provide some downward pressure on prices, but there's some key mitigants, I think, that will help sort of pricing for New Zealand farmers over the next 12 months. But the risks are heavily weighted down to the downside, and if one or a number of them start to eventuate, that will start to severely impact pricing. But in the longer term, those structural shifts in what, where, and how we eat food, will provide New Zealand with the opportunity to capitalise on being a reliable source of trusted, sustainable, healthy, and safe protein. So that's what I had from the presentation side of things, but I'm more than happy to take some questions.
I think I don't know if you can hear me, Blake, but thank you very much for that. Yep. Have we got some, I was having trouble unmuting myself. Have we got some questions from someone? I was just going to ask about the rise of online supply channels. Is this becoming a big trend overseas? And also, I mean, I think it's happening a wee bit in New Zealand, but is it going to be a big trend overseas? And how will that sort of help?
Yep, I think so. Look, online is nothing new. Online's been around for a while, but I think it's probably the growth in that channel has probably been slower than originally expected. What COVID has done is it's forced people to use it and get used to it. So I know myself, during lockdown, suddenly I was buying all kinds of stuff online that I'd previously go down to the shop to buy, and actually I realised that it's actually a lot more convenient to go online and have it delivered to me. So there's habits that I'll pick up through lockdown that I'll continue to do after lockdown, and that's why I think we'll see this as a bit of a shot in the arm for that sales channel through online.
It is difficult with sort of meat being a more difficult product maybe to buy and distribute in that way.
Yeah, no, agreed. And look, the opportunity is it does enable us to probably cut out a few more of those middlemen and get a bit more closer to the consumer. But you did right. The flip side is what are the supply chain challenges and implications around that? And that's where you have to sort of think again around your packaging and building sort of relationships with different kind of distributors in different markets. So yeah, opportunities, but by no means am I saying it's going to be an easy or quick one to tap into. But again, I think we're probably better positioned in New Zealand to tap into that than some of our competitors, like your South American producers that are very much around bulk and volume.
Right. Yeah. And does that sort of are we seeing innovations in packaging? So because there's a kind of a bit of a push against excess packaging and plastic and all those things that are difficult to compost and that. And this kind of, and then we want to go online. It sort of seems to cut across the whole drive against packaging and that, doesn't it? Are we seeing that sort of innovation that we need?
We're definitely seeing innovation, and you're dead right, because the trade-off with packaging is shelf life. So good packaging gives you longer shelf life, so you've got less wastage of food and it can last longer. But you're right, from a sustainability point of view, there's a number of negative things. Yep, I think we are certainly seeing innovations, whether they're major step forward or going fast as some people would like to see. I don't know. I'm not really an expert in that field. But yeah, I definitely know, talking to the various meat companies, that that's something they're very conscious of and very much working on.
Right.
Yeah.
Blake, Alan Barber here. The China situation could take a bit of a turn with the latest pronouncement on the Hong Kong on the situation in Hong Kong, the legal position. Is that likely to cause us some serious problems with trade or the extradition issue, or is that something you think China will utter its telling off and then get on doing things as normal?
Yeah, look, it's hard to say. I'd like to think it is that in terms of, like you say, that they'll make the right noises and things will get on. I think we've got to be very cautious, though. You only need to look across the ditch in Australia, where they've probably been more forceful in their pushback against China, and it has started to have implications in terms of 4 meat processing plants there a few months ago lost their exporting license around packaging discrepancies. To my understanding, there's a lot of other countries that could have similar issues if China decided to highlight that. So at this stage, I think we get away with things in terms of we haven't been as forceful against China as Australia has, but it does, it can become a snowballing effect. And I think the risk of the bigger geopolitical challenge is, as those tensions between China and the US, increasingly we may be forced to say, split it around which side we lie on. At the moment, we've sort of done a pretty good job, I think, of walking a middle line. But the risk geopolitically, if things really kick off, we may have to be more picking a side. So yeah, long story short, my take on Hong Kong is I don't think that would be a game changer for us. But we do need to be aware of that snowballing effect, that Hong Kong might not be the last geopolitical flare-up we have in the near future.
I suppose the other thing we might have to concern ourselves with is that after September the 19th, maybe Labour Greens government, and they may have a rather different approach from the New Zealand First coalition to relationships with China. They may follow a rather more idealistic stance, which could be to our detriment from a trade point of view. Yes,
yeah, possibly. Although, to be fair, New Zealand First is probably one of Winston is probably one that has pushed back against China as hard as anyone.
Yeah.
So yeah, who knows?
I've just put a cheeky question there. Where have all the lamb racks gone, Blake? With the drop in the UK and US food services, should we be clearing our freezers to make room for a whole lot of cheap lamb racks that might be coming on the New Zealand market?
Well, I've definitely seen them. Yeah, I've seen them in the New Zealand supermarkets at discounted rates. I think they're at a price now. They are being purchased in market, but that's only because they're at such a reduced price. And I suspect, I don't know if it's still the case, but at some point there is probably a lot of them sitting in storage somewhere across the country.
Have they gone into those traditional markets, or is that what you were saying? That has China taken a lot more as the price has dropped? Or
my understanding, is the traditional markets are sort of starting to buy them again, just because they've come off so far.
Right. Okay. The other thing I was going to ask was, do you think with that huge drop in the amount of pork being produced in China, will that produce a structural shift of people moving to, is there any other sort of cheap protein that people will move to and not go back to pork? Is it, as that production increases? Is there a cheap plant protein or what?
Yeah,
what people...
good question. First of all, even before the African swine fever, we were seeing a structural change away from pork consumption in China. That's traditionally their protein that they do eat. So there was a structural change. So this will fast track that. Not like we'd still see pork being a stable diet. What it has done is it's forced pork prices through the roof. So that's closed the gap between pork and your higher protein, higher cost proteins like beef and lamb. So that's what's been good for us, because the cost difference has closed up so much, and it's meant consumers are now trying different products that they hadn't because it was previously too much. And it will again probably fast track some of the shifts away from pork into the other proteins. Yep, look, it's definitely been the theory that similar thing with plant-based protein. Would expect to see quicker uptake of that, and that may well be happening. I just haven't seen any data or stats to back it up, but I wouldn't be surprised if that was the case. It is such a huge protein gap that anything they can source to fill that gap is likely to be put into use.
Mm-hmm. Oh, interesting. Yeah, it'd be interesting to see. Like, I can imagine probably a lot of innovation in China in the plant protein space as well as other countries. Like they might be coming up with whole new things that not necessarily a burger or anything like that. Just something
Look,
quite
to be honest,
different.
plant-based protein probably, if anything, lends itself to your chicken nuggets or like that. Like I say, it doesn't actually have to. We hear a lot about that. They're exclusive high premium plant-based proteins, but there's many other forms of it, and I think you did right. I suspect that's very much at play.
Be something that looks like tofu or or something like that. Okay. Oh, well, look, thank you very much, Blake. If there's any more questions, they don't seem to be coming forward, but thanks. That's given us a really good insight, I think, into what has happened over the last, gosh, it's only 7 months, isn't it? But things have moved very quickly, and it'll be very interesting to see what happens in the next 7 or the next couple of years, in fact, won't it?
Yeah, absolutely. The last, the last 2 or 3 years, in terms of our trading environment for red meat, it's been pretty, what you almost call benign. It's been pretty stable. African swine fever was probably the biggest variable, but apart from that, things have been, like I said, reasonably stable. But I think, that's very much changed very quickly. Yeah,
we might be hoping to go back to the boring old days, I think. When things don't happen.
Boring was pretty good to us for the last couple of years.
Yeah. Lovely. Okay, well, thank you very much for your time.
Hey, not at all. Thanks, everyone.
Thanks. Bye-bye.